tell us a little bit about why now we saw this sort of exit.
Yeah, I mean, it's really exciting to have sort of the first and the largest all-cash exit in this recent wave of AI. And it's been really exciting. I mean, CaseText has been a company at the forefront of AI since we invested about 6 years ago and was working heavily on it even before that. And they had developed some really incredible technology even prior to GPT-4, involving parallel search technology that earned them a customer base of over 10,000 people. So because of that, they were invited to be in the sandbox very early on GPT-4 with OpenAI. And they launched this new product called Co-Counsel in March. And within 45 days, they added another 1,000 plus customers using this new product. So we've seen AI come a long way in a very short period of time. The delta from GPT 3.5 to GPT-4 was pretty incredible. So CaseText actually tried to pass the bar with GPT 3.5, and they scored sort of a measly 10% on the California State Bar. I took the bar years ago. I'm a lawyer as well, and I probably could still do 10%, I hope. And then when they launched their new Co-Counsel product using the fully featured GPT-4, they actually scored 94% on the California State Bar, which essentially means that this product could stand in the shoes of a full legal associate.
In many ways, it was ChatGPT 3.5 and 4 that got the whole world suddenly ignited and excited about artificial intelligence. But you have been investing in it for a long time. This is a company you backed years ago and continue to then see its trajectory. Are we in a hype cycle, or is it necessary that had to happen to get this sort of level of sudden application of a CaseText, for example?
Right. No, I don't think we're necessarily in a hype cycle. I think the technology just came up the curve to that last increment very, very quickly. So we've been investing in AI, since I've been in venture. At Morgenthaler, we were the first institutional investors in Siri. And just to see the evolution of how good AI has become since then. I remember, product testing Siri in the early days, and it could understand, very little initially. And then we came into Figure 8, which was really the picks and shovels for AI. And that company was acquired by a public company called Appen. And then we did Luminar. And Luminar, has AI at its core. They're an autonomous driving company. And they, reinvented the entire LiDAR stack and the AI software to go with it, right? So I think AI just suddenly had a leap forward in its capabilities, as we saw from the leap forward from GPT 3.5 to 4.
How many public companies, or how many ultimately big companies, are desperate to start buying in this space? Was Dow Jones the only one out there who was wanting to buy CaseText?
I can't comment exactly on the other possible acquirers. I can say that the company had more than their fair share of venture term sheets they could have chosen from if they wanted to go ahead and take an equity round. And then Thomson Reuters was just the logical acquisition partner for this company.
Let's talk therefore about the venture equity that still wants to get into AI and more broadly in the space. What does it look like? What are terms, what do valuations appear to you as someone who's looked at AI before it kind of got frothy?
Yeah, so overall, valuations are down, but for AI, right? So AI is, I would say, the most heavily invested, sector right now. However, I think it's really hard to imagine an AI company starting from scratch right now and becoming a big entity. I mean, what we like to see, I actually love sort of Series B companies, right? So companies that are late A or early Series B. And what that means is they have some semblance of product market fit. They're actually solving a real problem. And then AI can come in and really supercharge that initiative. And so, for me, I think the bigger opportunities leveraging a technology like AI are companies that have a unique data set, that already have a client base that they understand the use cases for quite well. And now they can come in and solve the problem in a much more robust and interesting way. So we're focusing a lot on that sector. And we're seeing it in our own portfolio even, how this new technology is really helping to, supercharge our current customers, including companies like Skyflow and OfferFit and Kinetica that are all really benefiting from this new technology.
Now, I'm not going to say which of your portfolio companies aren't managing to cross that AI void, but But are there companies out there that are going to ultimately become obsolete? How are VCs in particular trying to ensure that their founders, their companies already backed, can pivot where necessary?
Yeah, I think they need to stay ahead of the curve. And so anyone who kind of got the press release on OpenAI and now thought they should do something, or on GPT-4 is behind, right? And so, the companies and the good companies that are out there have already, been thinking about this and been incorporating the benefits and the advantages of, GPT-4, and have been way ahead of it. And we were just lucky to be sort of part of that, having seen kind of what was coming, what they were going to release with GPT-4.
What about venture more broadly? Like, obviously you've had the benefit of the odd exit just now, but IPO still remains pretty much shut for many people. People are feeling that there's a regulatory hurdle of big companies buying smaller ones at the moment. How does your industry look? How is it thriving or not?
I have never been more excited about our industry since I came into venture, really in '08. I entered venture right when Lehman crashed, which I thought was probably the best time I possibly could have entered venture. I think these kind of dislocations bring an incredible amount of opportunity, and that comes, I'm a fairly contrarian investor, I believe. But we are seeing, early stage funding down, probably about 40 to 50%. We're seeing late stage funding down even more. And probably the most exciting thing for me is we're seeing the Series Bs, which are always the hardest round for a company to raise, taking longer than they have in 12 years to get their funding. So the time span from like a Series A to a Series B investing round is about 31 months right now, which is longer than, really I can remember on record. And on top of that, when you look really under the covers of what's happening, about 40% of the Series A and B rounds that are happening right now after taking 31 months are actually being led by insiders. So people that are already investors in the company that are trying to support the valuation that they currently have, which in many cases is too high. And so for us, what that means, because of where we invest, we have a lot of time to look at the companies and to make our choices, which is ideal.
What about coming in as a new investor? So if you're not just, as some are many, just being the insider that backs a company that's already in your portfolio, but wanting to come in and write checks to new companies, what do the terms look like? How much control do you have when you're that person looking from the outside to get in?
I think right now, it's definitely a buyer's market, right? When you're looking at the outside to get in, you have more time for diligence because of just it's the time that it's taking. And you can pretty much set the terms. We are beginning to see something we haven't seen in a long time, which is down rounds, right? When I did a lending club in the depth of the credit crisis in Q1 of '09, it was actually a down round, which ended up quite good. It was the largest U.S. tech IPO of 2014, right? But in that climate, most of those companies that were being funded were actually down rounds. We're seeing companies being recapitalized. So in other words, the new investor coming in and really cleaning up the cap table and funding that company for the go forward. So, it's a tough market when companies are raising rounds right now, I would say.